And we're live. Hey friends, how you doing? Ernie here. It is 2:30 on a Wednesday afternoon. This is our second day in a row, back to back, Zero DTE shows, podcasts. And that's because we had a holiday weekend, and Monday was the Independence Day holiday, and so they pushed off expiration until Tuesday. Normally on Monday, Wednesday, and Friday. This week, Tuesday, Wednesday, and Thursday. So we get double the fun 2 days in a row. Today was a good day. It was a winning trade day. It's the first winning trade we've had in about 4 attempts. And that is mostly because of volatility, the volatility crush that we're experiencing. Now, it's not a big deal for us because we trade in an asymmetric way. Our risks are very, very small compared to our rewards. And particularly when there's a total lack of volatility, it's even more so because we contract our trades, and sometimes we don't trade at all. And that has been the case in the past week or so. But when we do trade, we trade very small. Our spreads are narrower. Everything about it just sort of contracts so that we just basically eliminate any kind of catastrophic risk. Now, the only way that you can really get into trouble is if you're over trading. That somehow you look at this as, because we've been winning so much that this is an opportunity to really YOLO it, just go for it all, right? And that's just the wrong way to look at it. Every day should be basically the same thing. If we come to a point where volatility contracts, then you contract. Just do the same thing over and over. If it contracts too much, then we don't trade. Volatility is really our lifeblood. It is everything to us. I mean, we need volatility in order to be successful. Now, yesterday we had a little dip in the market, and then today we also followed up with a very similar dip, not quite as deep, and so volatility inched up a bit. Now, that's not really the reason why we won. The placement of our trade was really not with great expectation, a great expected move. As a matter of fact, we expected a very small move, and that's exactly what happened. In fact, the target that I set pretty much was pinned. So that means that we got the maximum we could get out of this trade. And that's good for today. But today, the risk reward was only about 1 to 3, maybe 1 to 3.5. Some people may have gotten in when we pulled back and maybe got a 1 to 4 or 1 to 5 trade, and that's kind of anemic. That's on the low end for risk to reward for us. Generally, we're looking at 1 to 9, 1 to 10, 1 to 12, 1 to 15, sometimes even 1 to 20 risk to reward trades. Now, that allows us to easily achieve 100, 200% return on risk, and sometimes when we pin the trade, we can make as much as 1,100, 1,500%, which has happened several times. By my estimation, I say 1 out of every 10 times, but over the last 3 months, we've actually probably done it 1 out of every 7 trades. And like I said, the last 4 trades have been kind of anemic. We're going through a little bit of a lull. It's nice to get back on track again and have a winning trade. All's good. So that's where we're at. Now, one of the things that I've come across with some members is their, position sizing is really the biggest problem. Actually, position sizing in just about any strategy is usually the number one issue for most people, or over trading. And sometimes they're kind of related, They'll feel like kind of invincible, so they'll start upping their position size and thinking that, hey, Forget this idea of going for 3 or 4% a month. We're going to be going for 10 or 20 or 100% this month. And it's a losing idea. It's a losing proposition. More often than not, you're going to get burned. I don't know how to fix this problem. I guess the best way to fix it is to let people experience it, to run into the wall every once in a while, to get knocked upside the head. Maybe that just knocks sense into people. Just be patient. Don't be greedy. Take what the market gives you and no more. I mean, that's kind of like a parable or an anecdote or an analogy for life too. Just take what life gives you. If you try to be too greedy and go for too much too fast, you're gonna get burned. It happens every time. Well, maybe not every time. Sometimes it. Here's the problem. Sometimes, you get on one of these greedy streaks and you go for more and you receive it. And that's probably the worst lesson that a person can learn in trading, is getting rewarded for bad behavior. Unfortunately, it happens, and then you may have gotten rewarded many times, and then all of a sudden you get burned as you should have. But they don't get the message, and they go back, and then they'll blame the strategy or the market or whatever instead of blaming themselves. The other problem that I've seen people have is lack of execution skills. Really understanding your platform, understanding everything about it, how to get in, get out, who to call in the event of an emergency, how to get into a trade. I mean, is one of the most basic things. So I'll put out a limit order as an alert and say, look, this is the trade that I'm taking. And then people will, after half an hour saying, I couldn't get into that trade. It wouldn't fill. And I'm thinking, well, did you try incrementing your offer by 5 cents every minute or so and seeing if that worked? And a lot of people don't even know how to do that. So this is what I'm talking about, execution. Knowing your platform and being a skilled executioner of that platform. So important. So it's one thing to understand your strategy and know where your edge is coming from, feel like you have all the confidence in the world and so forth. But if you don't know how to put on the trade or what to do in the event of, say, a fat finger trade or just a mistake, how to back out of that or reestablish or do whatever it takes to fix the problem, then you probably shouldn't be trading, or at least paper trade for a while and develop your execution skills that way. If you can make money consistently and get out of issues without any money at risk, then you have a little bit more confidence for those times where you need that kind of skill. So important. So there we go. Position sizing, exercising a good trade, and don't get caught into the trap of being rewarded for bad trades and think that you're going to keep on getting away with it. Eventually you won't. Eventually you won't. Recognize when you're taking a bad trade. Recognize when maybe you're overdoing it a bit, and realizing that if you get rewarded for it, that it was luck. That the next time you're not going to get rewarded for it. Hopefully you won't be. The longer it goes on, the worse the problem gets. The more often that you get rewarded for bad behavior, the worse that behavior becomes. It's kind of like the Fed. They just and government. They're not getting punished for their bad behavior of overspending and putting us deeper and deeper into debt. They never feel the pain of that. Only the constituents feel the pain. they seem to be immune. Well, they are immune to all of that. And that's a terrible thing. Now I'm getting off into a political rant. I didn't want to do that. So Ken's asking, so all the other Zero DTE rooms risk $500 to make 30, and you risk $2.35 to make 205. A guy could make a living at this. Yeah. Well, I mean, that's and today, today's win about 100% return on risk for most people. Some people took a 50% return on risk. That is really scraping the bottom for most of our trades, and we're doing it in a very low volatility regime. So that's what we can expect. I don't expect this market to continue like this for too much longer. On average, we experience something like this about 16% of the time. So 16% of the time we're in a low volatility regime, or where premium has dried up, the expected range has diminished to unbelievable levels, and that it's fairly easy to recognize. Sometimes you don't see it right away because volatility can crush very quickly, and you can get into one of these regimes very quickly after hitting big wins or nice consistent wins over and over again, hitting with 1 to 10 risk to reward parameters, and making $300 after risking only, say, $50 for the trade. And those are normal occurrences in this strategy style. And then all of a sudden everything changes. Now it's not like it just all of a sudden changes. We see volatility dropping slowly, and then eventually it falls off a cliff. And then sometimes it takes 1, 2, 3, or 4 trades or opportunities before you get the message, and then you realize that, okay, I got to pull back and just wait it out. And that's not bad, because quite frankly, for some of our trades, the trade that we had 2 Mondays ago, that one trade has basically financed the next 10, 15 losers. So when you think about it that way, it's not too bad. But it's better to to recognize as soon as possible that you're in a situation where you need to contract. You need to reduce your position size. You need to set the greed on the table and say, look, I'm not going to make bad trades. So Alex says, I learned all the theory and strategies, then I went on to IB. I didn't have a clue what I was doing, because that's all part of the trade, Alex. The trade is not just learning the theory, the strategy, getting the confidence, and understanding the edge. If you cannot execute, none of that is worth anything. It's kind of like, maybe you're a football team. You go back and you look at all the tapes, and you see, and you get all the strategy and the playbook and everything, and you got it down cold. But until you get onto the practice field and you do it over and over and over and over again, and you build in that muscle memory, it's, all the strategy and theory and practice means nothing until you've actually ingrained it into yourself. Okay, here's another comment. Trying to figure out when I should be in the room. Do you put trades on often the night before? Well, the easiest way is just to monitor the Discord, and you can put the Discord app on your phone. When I say something of importance, I always direct it to everyone. So that's a notification queue, and you'll get notified on your phone. So then you'll know to look and see what's going on. And you can see a trade building up. Now, I'll typically take a trade one of 4 times. It'll either be the night before, usually late, around 9 to 11 p.m. Often you'll have a chance later in the morning when you wake up, if you missed that trade, to put it on, sometimes at a better price. But I'll put the trade on then, or I'll put it on right after most of the economic reports have come out, around 8 o'clock in the morning. I'm speaking of all Eastern Standard Time, by the way. The next opportunity is usually late morning, like around 11 a.m. or so. And very rarely will I put on a trade very late afternoon, maybe 3 o'clock. But it has been known to happen. So those are the 4 times that that you'll see me make a trade. I'll repeat it. Early or late at night, after 9:30 to 11, after the futures market is opened up, I do some analysis and I recognize an opportunity, and maybe I want to get in as early as possible to try to get as much premium under my belt as possible. The next time is in the morning, right after economic reports have been released, which is usually around 8:30, 8 o'clock, 8:30. And then that might, there might be some significant report that might be a binary event that could be a market changer. That's why sometimes I wait and put it on before the market opens. The next time is usually, if that hasn't afforded itself, I'll wait until later in the morning around 11 a.m. and put on a trade there. And then very rarely, sometimes right at the end of the market, if I think that there's an opportunity to, to make a quick point or two. So those are the times. And you can always see my strategy and my workup for that trade being built up. And I tell everybody, every step of the way, full transparency, exactly what I plan on doing. So as long as you have some sort of notification method, you shouldn't have any problem losing or missing out on an opportunity. Now, of course, I don't want you to just be tethered to what I'm saying there. Of course, in the beginning you are, because you're learning the strategy, but you should be learning everything that I'm talking about within the room, picking up the resources that I recommend, looking at the analysis. Take the volume profile course within the room, within the Discord, and watching that analysis. And over time, you'll start picking this up, and it will become second nature. Shouldn't take long. It should take maybe a few weeks, and that's one of the reasons why I do a 4-week trial. I figure after 4 weeks, you'll have enough opportunities under your belt and see enough of this that you feel confident that you could just start and then start making money, or at least do it. Have the confidence to go in there and take that next step. So hopefully that answers your question, Ken. Those are the times that I... now, today's trade, I was looking to pin at about 43.50 on the futures. And we're right about there right now. Right now we're at 43.47. We were at 43.50 for a while. It sort of consolidated there for a bit. It's moved down. Now it looks like it's going to pop up again. So we're going to probably have multiple chances at this. I've already exited my trade only because I can't watch it while I'm doing this show. But should have put everybody into a nice position. I think that there's going to be more opportunities as the week and month rolls on, as the summer rolls on. I expect a relatively sanguine or quiet summer. We'll be able to get out there and make good trades. I expect that our average return is probably going to be somewhere between 50 and 150% per trade. As the summer moves on and we start moving into the fall, that should start ramping up, and then our average will be more like 100 to 200%, with the occasional 500%, 1,000%, 1,500% trade. That will happen as the market starts gathering a little bit of moss. Well, we're almost going to pin the short strike again. We're at 43.48, 43.49, and moving up again. 43.50 is where I put the short strikes on the spread, and that's where you're going to get your maximum profit. And so people should be doing well. Ken says you might be vastly overestimating your audience. No, I'm not. And that's one of the reasons why this service is all about coaching and mentoring. I don't expect people to just jump right in and then become, master traders. This is a discretionary strategy, which means that we have some rules and guidelines, but your ability to get good at this is going to take some time, right? Now, that's not a cop-out. Most people that are, say, systematic traders think that if you can't put a system at it and you can't just follow some prescriptive methodology that it's all bullshit, and I'm saying that that's bullshit. I've been on the purely automated systematic side as well as the purely discretionary side, and both have their advantages. For the most part, the greatest traders in the world do a little bit of both. They have some system automation and then some discretionary. Their best trades are usually the discretionary trades. So that's just the nature of this. It's just too complex to try to put down into some sort of systematic approach. I'm sure somebody's going to figure out something that will be a good aid, to the trading, and that's all well and good. But you just have to be resigned to the fact that it's going to take a little time to understand all the nuances, the analytical methods that you can use to try to give you the best edge. Now, we have a built-in edge that is there, that is totally apart from your analytical capability and your execution skills, although both of those are very important. The built-in edge that we have is the overstatement of volatility on a regular basis. When I say regular, I mean 84 to 85% of the time, volatility is overstated, meaning that when we sell volatility, we're selling something that's expensive. That's our edge. We have a further edge by being able to choose strategies that put us into an asymmetric position to take advantage of that edge. And then we compound that asymmetry with a superior analytical method using volume profile. So that's what we do here. All right. Okay, Ken. Just happy following my post. But here, I want everybody to realize that this service, as much as it may seem that way, it is not an alert service. This service is an educational service where I teach you the strategy. I'll coach you and mentor every single person individually, which I think sets this service apart from every other service that's out there. The alerts that I put out are an expression or a demonstration of me doing the strategy. And people are more than happy to follow along with them. I use it as an educational tool. I put all the analysis and the workup to every trade in the Discord, so it's there for you to study and get familiar with, and then see the trades happen in real time. I can't think, and I post all my trades in the room, so everything is completely transparent. I can't think of a better way to help people become better traders, understand a strategy, understand how to get better at it. I am always available to help you out. I literally give out my home phone number or my personal mobile number to every member, including trial members. So I am there to help you through this entire process. On top of that, the cost of the service itself is ridiculously low, and I can guarantee you that it is going to go up sometime in the future. As this business grows, it's starting to get to the point where it's tough for me as an individual to handle the just the day in, day out stuff, and so I'm going to have to hire a virtual assistant. And I'm actually interviewing companies and people right now to do just that. Probably won't have somebody on board until after I come back from vacation in August. But it's getting to the point now where I know that if people keep on coming in at this rate, that I'll need assistance to be able to handle it all. At least take away all of the back office operations from me and help out with some of the production of the content, and so that I can just concentrate on the strategy, mentoring, coaching, and that sort of thing. So that's where we're going. All right. So that's it. That's it for today. It was a successful day. I'm very happy for everybody that made money today. I think that the opportunity is going to be better as time goes on into this summer, and then in the fall it's going to be off the hook. I can guarantee you that. So that's it. Thank you very much. Where's that off button? Oh, it's way up there. All right. One more question. Changing the subject just a little bit. Do you stay in contact with Greg Manarino? I haven't talked to Greg in probably over a year, so I don't. Very good. All right, people. Thank you very much. I send him, birthday wishes and New Year's wishes, and he replies back to me, but we haven't talked. We'll see. Oh, there we are. We've pinned the trade again, right at 43.50. Maximum profit right now. All right. Take care. Peace.